special meeting / work session to order. The Board of Education maintains a web page on lewispalmer.org through which members of the public can find live streaming information and meeting records, as well as presentations and resources which will be reviewed and discussed during this meeting. Ms. Wood, could you call the roll, please?
Is Mr. Clausen calling in? No. Absent and excused at this time. Ms. Phillips?
Here.
Mr. Schwartz?
Here.
Mr. Taylor?
Here.
Ms. Upchurch? Here.
Here.
Thank you. Ms. Upchurch, would you lead us in the Pledge of Allegiance?
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Get onto my board docs.
So I'd like to make a motion to express the Lewis Palmer School District 38 Board of Education's opposition to Proposition 122 via approval of the resolution titled Opposing Psychoactive Substances in Our Community as presented.
So by Robert's rules, it's already on the table, and it's already been, the motion's been made and seconded, so it's seconded still.
How do I untable it then?
Okay. Did you make a motion to untable it?
I actually thought we had withdrawn, but
So it's still old business, so the motion still stands, and it's where we are right now is, it's been made and seconded, and I seconded it, and so we're in discussion on it right now. But I'll also second the motion still.
she's having trouble hearing us.
Teresa, can you hear us?
I can hear Chris and Ron just fine. Tiffany, I'm just not able to make out what you're saying.
I seconded the motion.
That's much better. Thank you. Can you just repeat that one more time?
Which part, the seconding?
I'm caught up now. I had an audio delay. So I heard, I heard Chris move the motion and Tiffany seconded. Is that correct?
That's correct. Thank you. Any comments or discussion?
So I'll kick off the discussion. There is two intents with this resolution. The first and foremost is the lack of local control in regards to what's on the ballot. So in full transparency, the reason it's titled as what it is was to bring awareness and attention to voters about the potential of our students getting their hands on this and the effects in the building. But more importantly, and beyond this, is a bigger picture of wanting to set a precedent where we as a board stand firm and strong on making sure that our students, when they're in our buildings, are in, indeed, a safe, healthy, and welcoming school. And we already see that we have, in our communities, we have problems with fentanyl, we have problems with vaping. So this is to solidify again that all mind-altering drugs, that we want to take a firm stand on being proactive and protecting our students.
Tiffany, are you finished? May I respond?
Yes.
Okay, so first of all, I really appreciate your initiative on this. And I hear both of your intents very well articulated. I am completely in alignment with your strong stance on safe and healthy schools. I think where I have a respectful division from that is that because it's an initiative on the ballot and hasn't been voted on yet, I think our efforts as a board may be possibly better set on action within our own policies and articulating and making sure our policies are the most effective with the detail as to how we incorporate additional substances in the future. So rather than I would rather put more discussion in further in the future after this is voted on and after we know how it will play out within the state and within the local districts.
And that's that's absolutely fair. I can see that. I thought about that and considered that as well, which is why the more I contemplated, the more what I wanted to focus on was making sure that this is a bigger picture and a broader picture. So I appreciate that position, Teresa.
Sure, and I'll add one more thing that came to mind the last few weeks in thinking about this is that we as a board and as a district administrative team have worked really, really hard over the last few months and in the last 2 years to present information, very factual information, and let our stakeholders make decisions. I feel that this leans past that level of comfort for me personally as one board member. And because of those two reasons I just laid out, I will be voting no.
That's fair.
So my thoughts are a couple fold. There's always a division between us as elected board members and us as citizens and voters. And in the spirit of full transparency and candor, as an individual and a citizen, as a voter, I'm against it. As a board member and elected official and representative of the community and the students, I concur with both Ms. Phillips and Upchurch that we should work diligently to ensure we don't have mind-altering substances near or in our school system. However, we also work hard to be apolitical. And since this is on the ballot, I'm wondering if there isn't a way for us to build some kind of a message or policy that states exactly what I just stated and stays away from the political frame. And I know Mr. Clausen had some thoughts, some pretty strong thoughts on this as well. Of course, he had something come up, so we'd sure love to hear from him as well.
Any other comments or questions? Hearing none, Ms. Wood, would you call the vote?
Ms. Phillips?
No.
Mr. Schwartz?
No.
Mr. Taylor?
No.
Ms. Upchurch?
Yes.
So we'll now move from the special session into our regularly scheduled work session. And the first item on the agenda for the work session is C1. We're going to review the Family Act program options.
Good morning.
Good morning.
Good morning.
Thanks for giving me an opportunity to talk about this. So this is new legislation that will be in effect starting January of 2023. So I want to talk a little bit about the Colorado Family and Medical Leave Insurance. So what is family? So Family is legislation that was signed in November of 2020 under Proposition 118. It's a state-run program that provides leave benefits for eligible Colorado workers to have access to paid leave in order to take care of themselves or their family due to growing their family or due to care of a loved one that has a serious condition. Eligible employees under this legislation will receive up to 12 weeks of leave. There's been a lot of confusion because we have FMLA, which provides 12 weeks of leave, and family also provides 12 weeks of leave. So for the general public, people are like, what's the difference between family and FMLA? So I'll explain a little bit about that. So family is designed off of similar program in California where it's just additional leave. So it's for those, if somebody has childbirth or pregnancy complications, they can receive up to an additional 4 weeks. So it could be up to 16 weeks of leave, paid leave. This benefit does run concurrently with Family and Medical Leave Act, FMLA, and or any short-term disability that the employee might have. Under this legislation, both the employer and the employee contributes premiums for the program. Contributions will begin in January of 2023, and then benefits do not begin until January of 2024. So as you can see, the state will draw the premiums for a year before anybody can access those benefits. This benefit is referred to as social insurance, and it is not tied to an employer, it's tied to the individual.
I have a quick question. Is there a cap on the salary? I see the cap on the rate, but is there a cap on salary?
There is not.
Okay.
So the cost is 0.9%, which is split between the employer and the employee. So each take 0.45% of the cost of this premium. The rate is currently set through 2024, and then it'll be set annually beginning in 2025. There is a rate cap of 1.2, which would mean 0.6 for each employer and employee. The premiums are deducted each month from an employee's paycheck and are remitted by the employer each quarter, much like we do with unemployment taxes. So spent a lot of time talking to other districts in the region because part of this legislation allows local government employers to opt out of the program. And K-12 public schools are considered local government employers. So if the school district does opt out, employees who wish to participate in the program would still be able to participate. So they would just go online and pay their portion of the fee for the benefit, not the full portion. So there are 3 options for our district to consider. One is to participate fully, 2 is to decline all participation, and 3 is to decline just the employer part of the participation. The first option, participate fully, the district would pay the employer's share of 0.45%. We would withhold the employee's share of the premium at the 0.45%, and we would submit that wage data to the family division quarterly, again, like we do with unemployment taxes. So the impact to the employees, the payroll deduction begins in January 1 of 2023, and then they may start applying for benefits in January of 2024. Second option is to decline all participation. So the local government must vote not to participate, which is why we're discussing this. We must notify the family division of our decision, and then we revisit the decision to opt out at least once every 8 years. So the impact to employees is they still have the right to participate in the family program, even if we vote to not participate. So there's no loss in ability to participate in this program for employees. Employees would elect self-coverage, much the way self-employed workers do. They go onto the website, the family website, and they sign up for the benefit. They would then report their own wages and remit the employee share of the premium by creating an online account through the family system. The third option for districts is to decline the employer participation, which means if we vote to decline, we could still assist employees who want to individually participate in family. The local government, us, would facilitate voluntary payroll deductions and remit the employee share of the premium once per quarter and submit that wage data as well. So the impact to the employees under this option would be they would voluntarily enroll and see the deductions out of their paychecks. And then the district would be responsible for remitting the employee share of the premium and submitting wage data once per quarter to the family division. Any questions about that before I move on?
Can you?
I have a question.
Yeah.
What I'm trying to understand, and this is a little bit out of my wheelhouse, but why would a district fully participate if the employees could participate basically on their own through a different portal, if you will?
Correct.
Is it just ease?
Basically. So I think when this legislation was enacted, I think there was enough pushback, mostly from local government employers saying, wait a minute, why are you requiring everybody? And I think that's the biggest piece, and I'll get to that in a minute, but I'll talk a little bit about it now, Teresa, is, this requires, if we opt in, this requires all employees to participate, whether they wish to or not. So it's, in my mind, it's like paying taxes. Some people don't want to pay taxes, but they don't have a choice. This legislation, because they have provided the opt-out option, but employees can still participate, there is the option for that to happen to where we wouldn't have to require everybody, and then those that wanted to, much like those that want to purchase short-term disability. If they see that that's a benefit for them, they can purchase that insurance to cover whatever they have that they might think might come up. So your point is very well taken, and that's been the focus for a lot of school districts in Colorado.
Thank you. That was helpful. And then further, I'm wondering, I remember back to an Engage and Elevate session, I believe, last year at Palmer Lake. I know some of the admin was there, talking about providing an environment that is more desirable, an employee environment that's more desirable beyond just the actual teacher pay or the classified pay. And I'm wondering if one of these options provides more or less of that, in your opinion.
In my opinion, I don't think this is a recruitment or a retention tool, and here's why. Employees can still participate in this. I believe that employees, I've talked to employees in my previous district. I didn't have a lot of opportunity to talk to employees specifically about it here. But the feeling was, why would you make us participate in something that we don't want to participate in? And I do think that if an employee is in a district that's participating and they leave that district, they can still take it with them and they can still participate in any district that doesn't participate in this program. So it's not taking away a benefit if we don't provide this benefit. And the employees that I talk to would not see this as a benefit. Those who might be family planning would see it as a benefit. And obviously, none of us want to think of anything catastrophic happening where we need to take care of a loved one or ourselves. But those are things that people plan for often in different ways. Short-term disability, long-term disability, those kinds of things. So, and I think the other thing too is we provide family medical leave. And so they still have job protection under family medical leave, and this runs concurrently. So in my mind, it's an additional ask financially for not really any additional benefit other than there is some financial pay for them, but it's limited. So, and I didn't include that in the PowerPoint, and I wish I would have. It was not available on the family website. We're kind of building the plane as we're flying it. And so they just last week uploaded a chart that shows if you make this much money, here's what your benefit would be. And the more money you make, the less the benefit is, obviously. So the max salary that they will consider is $1,100 a week. And so, but the benefit drops. So it starts out at like 90% if you make up $500 a week. And then it drops to 70% at the next level, and I apologize, I don't know what that is. And then at the next level, it drops to 50%, and then at that highest level, $1,100 a week, it drops to 35%.
May I ask a couple questions? I just want to attempt to summarize and clarify. So if I'm understanding this correctly, it's only elective if the district opts out. Is that correct?
Correct.
Okay, that's point one.
Yes.
Point two, if the district opts out and it's elective, what is the benefit to the employee that elects to be in? Is it 50% of the total or 100% of the total?
100% of the total.
Who's,
So whatever
who's
their-
paying the second 50%?
Nobody.
How do you get to 100% if nobody's paying in?
Correct. That's a very good question. But that is how this program works. So
But it doesn't work.
agreed.
Okay. That's interesting.
Yes.
Next question is, you said it's 0.9 to 1.2% of what?
Of their salary.
Okay.
So whatever their salary is,
Right.
and we're
and,
not.
and then it's
limited.
capped.
The benefit is capped.
Right, exactly.
But the premiums
Okay.
are not.
So it sounds like, and then, okay. Well, this makes an easy decision, doesn't it?
So let me finish the slides here because I do have some more information to share with you. So the majority of Colorado school districts are choosing option 2 to decline all participation. The employee does still have the option to participate and would only pay the 0.45% employee portion, not the full 0.9. I put together some risks and benefits, so if you'll indulge me just a moment more. The risks, if we were to participate, is that it is a big ask of our payroll department. For our district specifically, we have one person who does our payroll, and this would be another ask for her to create a file, get all employees set up for this coverage. It's a manual process, and we have limited resources. The costs could increase for District 38 from 0.45% to the 0.6%, and could be even greater beyond that. So the sky's kind of the limit in this scenario. Employees who don't wish to participate, if we opt in, they'll be required to, and that doesn't feel very good for employees who are already taxed financially and struggling. We would be locked in for 3 years if we opt in, whereas if we opt out, we only have to revisit that decision every 8 years.
Question on that? Mm-hmm. If we opt out and then we come to this juncture next year and we determine that for some reason it's absolutely in our employees' best interest, do we have the agility to opt in at any point in time?
We would opt out for 3 years, and then if we say this is something we want to do, then we could opt in after that 3-year period.
Okay,
So
thank
we
you.
would opt out until.
So it's a fixed election window, so to speak.
Correct. If we elect option 2, employees can still participate, as we've already discussed, and they would remit payment on their own. If employees choose to opt in, it does require a 3-year commitment on their part. Option 3, if we chose to opt out as a district, but opt in for any employees that were interested, we're still giving a workload to our payroll staff to pull the employee portion from their paychecks and remit to the state. So I just put together a little cost analysis so that you can see it. From fiscal year 2019 to fiscal year 2020, you can see the expenses there. It's an average of $157,000 a year. So the district's financial impact would be $157,000 to $225,000 a year, which is money that could go towards all employees if we so desired.
But to be clear then, that's also that same level of burden we're placing on the employee.
Correct.
Right.
So it wouldn't be individually, obviously, but yes, as a whole, that would be same burden.
Should be the same matching amount.
Yep. The other thing, if we, I've talked about it several times, but if we opted in, all employees would be required to. And I believe this is a financial impact, and there's a lot of employees that would not voluntarily elect to participate in this program. So the recommendation to you as the board is to decline all participation. And as a note, we as a district would need to notify employees of the decision once that vote was made. We do have to notify employees prior to December 31st of this year. Any other questions on that?
Yeah, I have one question. Have we done any type of survey to our employee group? It's something we do regularly, so I'm wondering if we have any kind of voice of the employee here.
No, so short answer is no, we have not. This is something that we're forming a kind of a staff collaboration committee, I'm calling it. So it's a representative group of staff members from across the district. We're going to have our first meeting this Thursday, and this is actually a topic I wanted Misty to cover with them as well. But it would really be kind of a really difficult survey topic right now because there's so much unknown and so much confusion about it. We wouldn't be getting an informed response from staff.
Brett, I'm sorry, but how can I vote if it's not clear?
Well, hoping that this presentation is bringing you clarity.
I just heard you say that there's not enough clarity for the employees to make a decision.
Because they have not heard the presentation, is what this kind of presentation. If they're just relying on it anecdotally or what they've heard, I believe that they need some of this presentation to get some clarity on it.
So that's too big of an ask?
So my anticipation was that after we had this work session that we would notify employees about information. We could post this presentation, give them links to the family website, ask them to contact me if they have any questions. I have looked at the legislation quite a bit. I've spent a lot of time on the website doing the webinars. And they would be more than welcome to contact me if they had any questions. And then the ask for them is then to come to the November 14th board meeting if they have strong feelings one way or another so that they could speak on their behalf. That's what other districts have been doing, is to notify the board that this is the legislation and then notify employees, give them a fact sheet with information, and then leave it up to them if they would like to come and speak to the board one way or the other. So that is something that we are planning on
I
doing.
appreciate that, and
Yeah.
that's excellent. So the point being is, I would still like to know, is this a 60-40 issue or is it a 90-10? That matters to me. What is the consensus, if you will, amongst the population, the employee group that's affected? Because right now I don't know. I'm hearing the recommendation, based on what other school districts are doing.
Sure.
But do we know within our school system what the employee group, how they feel about it? Ron?
So I had two more questions that relate to what Mr. Taylor just said. What's the participation ratio in the places, whether it's in California where the program is modeled after, or here where someone's already participated? What's the participation ratio?
That I do not know, but I'll find out.
Okay, that'll tell us something. Secondly, and it may just be for me, but if some of my peers are as poor at math as I am, can you help us understand how this stacks up in addition to or concurrently with FMLA? In other words, how many weeks in succession would an employee who participates in this program be able to enjoy, take advantage of, or be off?
Sure. So this program runs concurrently with FMLA.
Right.
So FMLA is 12 weeks as well. So they could potentially take the full 12 weeks. FMLA protects their job, is a job protection. This program is specifically to provide pay. So it's, again, as I shared with you, if it's somebody that makes $500 a week, then their payment is 90% of that. If somebody makes the next tier up, and I'm trying to remember, I think it was $700 a week, then their portion is 70% of that. If a person makes
It's capped.
Yes, if they make $900, it's 50%, and then if they make $1,100, it's 35%.
So my question is, what's the maximum sum total of weeks that an employee would get off concurrently?
12 weeks totally.
Okay.
And then if there were pregnancy or childbirth complications, they could potentially get 4 more weeks.
Okay, so it's 12 to 16 is the answer?
Correct.
Okay. And then, so at the end of the day, this benefit is incremental pay over what they would get for FMLA? Is that what I'm understanding?
Yeah, so FMLA is essentially, it's unpaid leave, but we run our leave plans in concurrently with FMLA. And so if a person has sick leave built up or they use their personal leave, then they could receive full payment depending on how much leave they have available. So if it's a person, say it's a brand new employee and they don't have any leave other than the 10 days that they get, they would get those 10 days of leave, and then the additional 10 weeks would be unpaid leave, where we would still protect their job.
So in this scenario, that would provide them maybe $500 a month for
Correct.
a week, sorry,
Right,
for example.
correct.
So that's okay. And thank you for going through this with me.
Absolutely.
My goal here is to really understand a day in the life of, and understand what the fiscal, emotional, and family value of a benefit like this potentially could be, and then what the participation ratios are in places where they've done it, so we can at least get a gut feel for the foundation of the model. Because it appears that it's a little kludgy the way our state has chosen to begin to implement it, at least from the initial cursory look. But it also appears as though it might be a wonderful benefit for a younger employee, frankly.
And I have another question, if I might. So if another district opts in, and one of their employees comes to D38 in the future for employment, what's the impact to that employee?
So the impact to them, if their district is currently participating, their district is pulling the premiums for them and remitting them to the state. So the impact to that employee is they would then go to the state website and register as a self-employed, essentially, worker, so that they could continue making their contributions, and they would do that quarterly.
They would make the same contributions that they're currently making.
Depending on salary, yes.
Understood, but then the difference being is our district doesn't participate, so they wouldn't get the matching contribution.
It-
Does that
no
have an
effect.
impact on their benefits?
No effect. So essentially, the employer contribution, it's not like para, where the employee and employer contributions go to that one specific employee. This program, essentially, the employer contributions are just funding the plan.
Right, but your presentation talks about a social insurance fund, which says it does follow the employee.
Right.
So-
So they can take it with them from employer to employer, but they're not responsible for the additional 0.45% that is the employer portion. So on the flip side of that, private employers are required to participate. So they have no opt-out option. So if it was a private employee, or a private employer employee, say that,
They're automatic.
so classified employee, for example, so they're automatically opted in. If they came here, then they could then elect to continue that contribution.
Okay, my final question is, you alluded to a leave plan that exists already. Is there already these benefits similar or better than what the state is trying to provide in place in D38?
So that's a great question. Essentially, FMLA is unpaid, 12 weeks of unpaid leave for job protection. But what we do is the employee can take their own personal leave or sick leave during that 12 weeks of time, which preserves their salary while they're on leave. Also, and sorry, I just lost what I was going to say
Well,
with
that's
that.
okay.
Give me a
I'm
second
going to
here.
clarify what you just
Okay,
said. So
thank you.
for those who've been here a while,
Right.
that works. But
Right.
for a newer employee, there's limited
Correct.
leave accumulated. right?
Correct. So, but then there's also short-term disability plans that employees can purchase for these short terms. So 30 days, 60 days, 90 days. There are programs where they can purchase that insurance on their own, which preserves 2/3 of their salary, which is a better benefit anyway.
And it would be interesting to me to see what the participation rate is in the short-term disability for that very reason is I'm really looking for who's at risk here, right? And so if we have things in place that cover this risk, that would be helpful in our decision process. Now, I also see that you want to bring this up in the November meeting, but the deadline to make the election is December 31. Is that correct?
To have it complete, have the election completed and employees notified prior to December 31st. So.
Okay. Teresa, do you have any questions or comments?
I just really appreciate the discussion. Thank you so much.
Tiffany?
Thank you for bringing this up. We talked about this. This was a hot topic, talked about a lot a couple weeks ago at the delegate assembly. Didn't come across any districts that are opting to participate. It seems like every district, especially ones that are our size, are opting out. So I'm curious, do you have any, is there a way to find out if there's any districts within Colorado that are opting in and their reasons for it?
Yes, I can find out. The ones that I've talked to, so I'm involved at the state level with state CASPA through CASE, and the districts that come to those meetings have all said they're opting out. But I'll send out in our listserv, we have a forum that we do over email, and so I'll send out a request to see if there's anybody that's opting in. I can give you that information.
Thanks.
You bet.
Ron, any other questions? Missy, thank you very much.
You're welcome.
Very informative.
Good. Thank you.
If any of the follow-up could be addressed during the regular board meeting, that might make this decision process easier.
I'll have it ready.
Our next agenda item then is C2, budget reporting overview, an amended or flexible budget discussion. It's not on statute, though.
Statutory. Yeah. So, Brett Ridgway, Chief Business Officer, and so as we go into this topic, which I believe would just be a more thorough review of some of the things that we've already talked about, and then adding on a couple of additional conversation points and analyses regarding the amended budget. So I am driving from my computer now, but I am still working off of board docs. For your benefit, Teresa. So what I'm going to bring up, the file I'm going to bring up first is the one labeled LPSD38 2122 trial balance. And this is a PDF version of this. This is the financial reporting package that I am building. This is where I'm at to date. And so I guess the first place I just want to pause on and anchor us to is just right on this first page for the table of contents to walk you through what I have in the package and maybe what some of the intentions are for that. So the first page after the cover sheet, which is something that I mentioned at the meeting last week, is the revenue and expense and fund balance summary for all funds. In the public sector, of course, we work under a fund accounting structure, and that means what that means is that we have several different pieces of money that are designated within fund numbers. Each fund is a self-balancing set of financial books, full balance sheet, full income statement, etc.
Brett, can I pause you? I'm sorry. Teresa's having a hard time hearing you, so if you could speak like almost right into the mic, I think that'll help.
Okay.
Yeah,
I need
like
to be like
Vader-like.
I
Maybe
need to
not
be
Vader, but something deep.
Yeah, that's what I'm thinking. I got to be like the guy on Maroon 5 or something, right? Just right
Yes,
on
like
this.
that is good.
Yeah.
Yep. Okay.
That's
You're
not
awesome.
this is not a natural phenomenon.
No,
So-
no, but
situation. So most accountants, I think.
is that better,
shy
Teresa?
away
Yes, it's better.
from- Yeah.
Thank you.
Okay. I'm sure you'll have to remind this of me again and again.
I'm going to continue to model as well.
Okay. All right. So really, this package, I know it's again, it's 71 pages, and it's going to get bigger as I add more things to it. But that's the point of that is to try and anticipate questions and provide resources that people can find answers to questions. This is not meant to be a front-to-back read. In general, what you would see is probably the first. It's only the first, and I'll say only with my air quotes. It's only the first 25 pages or so that have some value in terms of a sequential read. The rest of it is going to be either getting additional detail, thinking of a question, answering a question, et cetera. So, and what I do in those first 25 pages is I provide a touch point for all of the funds. And so if I just go for a moment to page 2, this is again all funds, and I will zoom in on this. So it's all funds going down the column, going down the rows, I should say. In the first column, you see all of the individual fund numbers and the fund descriptions. And so this is kind of an inclusive financial page of all the business that we do in the district. The same thing would be said of the second page, or the third page, sorry, where this is a balance sheet summary, and I will circle back to this, to both these pages after I finish this piece. Here, all of the individual fund numbers are shown in the columns across the top, going across the page. So, general fund, Fund 10, the CPP, Fund 19, et cetera. And it's after those first two pages, page 3 is an income statement summary for all funds in terms of the actual results. And you see that by, so I'm sorry, I said page 3. Page 4 is the income statement summary. And you see on the far right, you see what data set we are looking at. So here it is the 21-22 actuals in the upper right hand. And so if you zoom out to this again is a one-page summary of the income statement. Notice at the bottom of that page, on the bottom left, It's called net revenue or net expense. Again, technically speaking, in the public sector, we don't have income. So we don't have net income. We either have net revenue or net expense. That's semantics, I know, but these are some of the things that I have to pay attention to. Page 5 is the same income statement perspective, all funds, one page, except this is the budget. If you see in the upper right-hand corner, you'll see the budget, the 21-22 budget. So through those first 5 pages, or really pages 2 through 5, again, we're looking at all funds, all the business of the district in a very summarized view, looking at actuals and budget for a particular fiscal year.
May I ask a question there then?
Sure.
So on your consolidated balance sheet page,
Okay, so back to page 3.
and near the bottom, there's the revenue expense difference on the far right of $1,218,471, which ties right out to the next page.
Yes. Okay, so, yep.
The section right below that is my question. So I've got 21-22 actual, 21-22 budget. So the $1,218,000 is essentially saying that we had net revenues in excess of expenses, right?
Right,
Next.
net revenue,
Then the next line, which is just budget,
budget,
is that right?
yes.
We had anticipated spending more, right? That's the difference in how to look at
Exactly.
this.
The budget assumed that we would have net expenses, net
So we had
expense over revenue by 1.4 million. We actually ended up net revenues over expenses by 1.2 million. So those two numbers add together to be a $2.6 million difference in favor of revenue. Now, again, that's the total of all funds, and so you can look at that. That's that total column is there kind of just as an FYI because people, including me, like to know what that numbers add up to. But really, we have to pay attention to each individual fund across that page.
Understand that.
Yes.
But when I'm looking at big picture,
Mm-hmm.
I've identified how to look at that and say the swing
Yes.
between the budget and actual is the total of those two numbers.
Yes.
Thank you.
Yes, question.
What you're showing as an example is the previous school/fiscal year, just for clarity. So it's a full year look. As you continue to present this on a periodic basis, which I believe is once every 90 days, correct?
I would prefer to do it more often than that, but that's the minimum I need to do it. Okay. I prefer to do more often.
Can I just make a request that you let us know if you're running it year to date and you're then prorating the budget allocated numbers so we can do apples to apples, or if you put it against the full year number that we know that you've either projected it out or that this is kind of our to-go gap and we're on track to either exceed, hit it right, or come up a little short. Does that make sense?
Ron, my preference in how you just described that would be where we were always looking at the projected annual picture. So it's been modified by actual for 3 months or 5 months or whatever, but then the forecast or the budget is still there. So we're really looking at the annual impact. That would be my preference is all I'm with you.
So yes, I understand that. I appreciate your point there. And what I'll say here is, in the upper left-hand corner of this same slide, you see the indication here of the percentage of year completed. And so if we were looking at this exact same page for the 22-23 year-to-date data, it'd say 25%, as in being through September 30th. And then as we go into other pages, it will become more relevant. What I have typically done is only present year-to-date actuals and the percentage of year completed, which matches kind of the percentage of budget. I can create a data set that is what I would call a full year forecast, which has year-to-date actuals plus a projection of out months. I can do that as well.
So, if I may, I think where this one's loud. Sorry, Teresa. I think where Mr. Taylor was going was with respect to the fact that some of the expenses are lumpy versus even across months. That if you look at the full year, then you've got the net impact. Am I getting that right?
And Brett, that's what Brett just said.
Yeah.
Yeah.
Okay. Yeah, and as long as we all understand where we're at and how you're looking at it, then it's easy, right? And we get in the mode of looking at it correctly.
I would say I totally understand what you're saying. I don't disagree. The only thing I would kind of say to couch that as well is that our revenues are far more lumpy than our expenses. Our expenses really, on a material basis, are fairly consistent.
Yeah.
But there is still some small lumps, just not as material as we see on the revenue side.
Okay.
So yeah, I can definitely do that. Be happy to do that. Because
I guess I would ask Teresa and Tiffany if that works for you guys.
Is lumpy a statutory word?
That
It is
not
today.
All I know is flexible is not statutory.
Well, and I would like to make sure all of us on the funds themselves, we have a clear understanding of these various funds.
Mm-hmm.
Because, I don't want to go through this and ask the questions over and over again every time we do the review. I'd like to really, the general fund is what it is, right? And if you could just go through them.
Sure.
It would be appreciated.
So for that, I'm gonna go back to page 2 and walk down the columns here. Thank you. Down the first column, down the rows of the first column. And you'll see, so it starts with the general fund, really kind of self-explanatory in its definition. And what you always should remember is basically anything besides the general fund has a specific purpose, usually oriented in the revenue, but definitely oriented in the expenses. The type of revenues that we put into any of those other funds, the types of spends we spend out of those funds are done so for a specific purpose, often with restrictions to that. So for instance, if we take the next one down, which is the insurance reserve, this is Fund 18. Because that fund number starts with a 1, it's still considered general funds revenue, plural. But from a state perspective, there's general fund revenue, which can consist of the general fund, Fund 10, and a couple of other funds, which from their perspective all consolidate up to general fund from their view at the state level.
What are examples of dollars flowing through the insurance fund?
So the insurance fund, the reason that we have an insurance fund separate, this is mostly for our property and liability insurance. And so this is basically a risk management strategy to have that separated, visible, knowing what we are spending for property and liability insurance, what we are spending for claims that happen against that property and insurance policies. So oftentimes, if something were to happen, we had a bad storm and we had to do some roof repair as a result. There would be an insurance claim for that. We would get a certain amount of reimbursement from our policy, and we also would effectively have our copay, if you will. All of that would happen in this single fund, Fund 18.
So it has nothing to do with employee insurances.
It does not have anything to do with employee insurances. There is a design for that, which would be a totally separate fund and a totally separate process.
Very good. Very good. Thank you. And then preschool.
So the Colorado Preschool Program, CPP, so this is it's getting kind of antiquated, but it's still here. And so we're still accounting for it, and it's because it still shows up in the School Finance Act. But these are, this is specific revenue that is for specific slots. They're called CPP slots. So there is a total pool of money at the state level, and each district is allocated a number of slots, a number of basically preschool slots. And so we have to make sure that for the number of slots that we are allocated, which I think is around 22.
64. Is it 60?
Okay, that's the fund. That's the head count number versus the funded number. I'm thinking the funded number. So yes, so we have to basically move half of a piece of PPR for every CPP slot, and account for those spends in that fund.
So you said it's a bit antiquated. With the new Department of Preschool or whatever they call it,
Elementary.
how will that
education.
change this?
I think it'll change it completely, but that hasn't happened yet. And actually, they don't even know exactly how it's going to happen yet.
So you don't, it's yet to be determined?
Yes.
Got it. Okay.
Yeah. So until then, we're kind of going as normal, knowing that this is going to completely change.
All right. The next one, 15?
So the next one is empty. The next two are empty funds, and these are funds that I'm putting on there with some forecast, if you will, of how I'd like to change things as we move forward. Fund 15 is a capital maintenance fund. Right now, we have two capital-oriented funds further down this list in Fund 43 and Fund 44. And so I want to be able to clarify the purpose of each of those funds by segregating part of the activity we've been pushing through Fund 43 out into Fund 15. And so what I'm speaking of would be a project fund for annual stuff that happens and needs to be covered as it happens. What I'm talking about is tree maintenance. What I'm talking about is painting, or things that only come up and need to be addressed from a capital perspective, but we don't necessarily forecast it all out. We don't forecast A, and B, it's relatively speaking immaterial to the whole pie. A tree issue, we can address that. Fencing, we can address that as it comes up. Painting, we can address that as it comes up. Fund 43 should be for large projects that are specifically planned and have a big material impact.
So are they both deferred maintenance, or is just 43 deferred maintenance projects?
It depends on your definition of deferred maintenance, I suppose. They could both be considered deferred maintenance.
Well, I want to know what your intent is.
My intent is that deferred maintenance is a big ticket item in my
43.
view of it, which would be 43.
Yep.
Doing tree mitigation or doing painting or fence work is hey, we had a bad storm last night, we need to fix this, let's go fix it. We don't need to do that out of a Fund 43 big project. We need to do that.
And the mechanics of that would be like some percentage of your revenues would be
right
set aside for these.
Yeah, so in the historically
15.
speaking, there actually was a requirement to allocate 3% of PPR for capital maintenance purposes.
That's both, though.
That would be both. Actually, it would be more for the small ticket items.
Okay.
To allocate 3%. That requirement went away with the Great Recession. So some districts kind of abandoned that idea. I believe that it still is was a worthwhile process from the beginning, and I'd like to basically maintain that and have a portion of general fund money get allocated to Fund 15 to handle these day-to-day maintenance issues. We also then can have an allocation from the general fund to Fund 43 when we need to do some of the big ticket items like a geothermal project, right? And so I don't want painting and tree mitigation issues to get commingled with a geothermal project that is huge and needs a lot of specific visibility.
Let me just add, that's excellent, the way you're thinking. I really agree with what you're saying, that you maintain 15 for its intended purpose, and then 43 becomes exactly what you're describing. So
Excellent. Thank you.
Kudos.
Thank you.
Seriously.
While we're on this capital topic, then let me just talk about Fund 44 real quick and the difference of what Fund 44 would be. And you'll see I have it labeled as FILL, which stands for Fee in Lieu of Land. This is a capacity fund. So when we need to build capacity, actual additional space, additional bus, whatever it might be, because of additional student count. That's what Fee in Lieu of Land is, a program that says, hey, we're building a few houses. It's not going to be enough to build another school, but it does put a capacity strain on the school district. Here is some money for that purpose. And so those funds are segregated, identified for that type of spend. And a lot of times that kind of money builds up over time, and then a single decision is made to add a wing or add a classroom or replace some equipment. And so that fund has that specific purpose. So it's kind of a capacity fund, then there's a real capital projects fund, and then there's a capital maintenance fund. Any
Okay.
capital questions before we move on?
I'm good, thank you.
So the next one that's on this page that is still is also listed as blank is the MLO Operations Fund, Mill Levy Override Operations Fund. And so I have this in here kind of giving a forecast of would like to be able to provide specific visibility for mill levy override monies that come in. And of course, this, if the measure passes, this will be a particular place where all of that money would be processed, and so have great specific visibility to it. But I would also suggest that we probably start to separate the 1999 override out of the general fund as well and put it into this as well, because it just, people have questions, and this is a way I can provide answers by creating that fund and having some of that visibility by design.
That's the transparency piece.
Transparency, exactly.
Again, kudos. You're going right down the right path.
Can I jump in? Shouldn't we be putting the 1999 in there already? Because when we look at the budget on page 3, I believe it is on the budget, we see it in the pie chart form of, you can compare side by side of the 1999 MLO ballot wording on what it's to go for. And then when you look at the budget, it shows exactly and precisely where those monies are going already. So if we already do that, shouldn't it be in this already?
No, that's a good question. That's a good point. That's exactly what I would like to do. It just hasn't been done to this point. And so my first introduction of this process and this concept would be as part of the amended budget to say, okay, now let's do this separation, this segregation for those transparency visibility purposes. And again, when we're hitting the amended budget timeline in January, we'll know what happens next week and whether that's part of this equation as well. So yeah, that would be my intention, that we definitely would start with the 1999 money. So that's why I put it in here, because this wasn't a contingent on the election change. This is where we need to go change, and if the election goes one way, it looks like this. If it goes the another way, it looks like that, but it still is there.
Perfect. So it'll be there regardless
Yes.
of next week.
Yes.
Perfect.
Okay. Next one down is Fund 25, is the Fee-for-Service Transportation Fund. And so this is where we do all of the accounting for the operational program of the Fee-for-Service Transportation. And I emphasize the operational because I do separate out the capital piece of this, meaning the bus fleet itself. We don't need to buy the bus fleet out of this fund. That can still happen from the general fund, would be appropriate to happen for the general fund, but this is the a revenue that's brought in from the fee-for-service program, from the state funding every year, and then from a general fund contribution to make sure that this fund operates as a break-even fund, basically, and it provides good visibility to this as well. By the way, again, I'm new to the district still. I guess I can still say that after 3 months, although there's a lot of scars already. But I'm really happy that we have a fee-for-service program. That's something that I advocated for in District 49 when I was there when we started that. And the reason is not that I want to extract another piece of fee income from families, but it really provides us the right strategy to manage our route structure and manage our transportation program for the families that will actually use it. And so it's a very good strategic path, and I'm really happy that we are already there.
And we appreciate you helping us, deal with some of these scars.
The next one down is the Bond Redemption Fund, Fund 31. So we do have bonds outstanding that have been used for prior capital projects. And so this is a fund that is funded only from the property tax revenue that is levied for that purpose. And the payments for those bonds happen twice a year. And so there's not a lot of activity that goes into this account. But again, it's just great visibility and great segregation of a specific revenue stream that's used for a specific expense purpose.
So the net of what you're doing is all the purpose-built funds have their own allocation, right?
Yes, really, and say the purposed revenue streams then are accounted for in their own funds, and that where we can always consistently demonstrate that they were spent for the purpose intended.
It's great transparency. Thank you.
Mm-hmm. And I'm just noticing that there's one fund missing off of this page. I'm sorry about that. I'll get to that in a second. Nutrition Services Fund 21, much like the Transportation Fund. When you see a fund number that starts with a number 2, that's a category of revenue called special revenue funds. Anything that starts with a 2 has a special revenue fund. And so the special revenue for this is the Nutrition Services Program, which, just like Transportation, has the local contribution or the usage payment for people who actually who participate in the lunch program or buy school lunches. And there's also the federal and state subsidies that come into that program as well. Next one is participation fees, Fund 23. And then you'll see right below it the fundraising, Fund 28, which is shown as empty. You might recall that just a year or two ago, there was a conversion of fund numbers from Fund 70, fund number in the 70s. That's where fees and fundraising were at. In D38, we used Fund 74 and Fund 75. Fund 74 was for participation fees. Fund 75 was for fundraising. And the decision was made to take those funds and move them from a 70 series into a 20 series. And what happened here in District 38 is we did that, but we also consolidated those two into a single fund, Fund 23. That is a decision that I would not have advocated for. When you had good segregation between monies, we should have maintained that and not commingled those into Fund 23. So I put the fundraising Fund 28 with a hope that I might like to be able to pull those pieces apart again, so that we could see them separately, manage them separately and intentionally, because those are two very different kinds of money, fees and fundraising. You know, state statute allows school district to charge fees for certain programs, but it also has a requirement that we spend the fees for those programs in the window that they are intended. Fundraising, as you can imagine, is a much different thing. That can be a multi-year effort. We're fundraising to do something big project, so it can be a total multi-year effort. So it really would be best to maintain segregation of those two different types of revenue. But it will take some now at this point, since we've lost the segregation that we had, in order to pull them back out again. So this is something that I would like to do, but unfortunately with the other projects that we have, it'll probably be a little bit further down the list. But still would be a place I'd like to go.
Brett, I have a question, and I apologize if it's off topic. Do we have the ability to do fundraising for teacher pay? I was asked that just recently, and I was curious if you...
Well, so that's an interesting point, and it's not that we don't have the ability to do that. The question becomes is what is the sustainability of it?
Sure.
Right?
Sure.
And so, yes, you could do that. But how would you strategically then spend those funds that were generated, and what would be the message with that?
That was my answer.
Okay.
Thanks for going through these different funds. I think that's very helpful.
Yeah, so I mentioned that unfortunately on that page there's one missing, and I just didn't even notice that until I was going through this list. So let me go to the next page and just catch that fund, which is Fund 22. I don't know why it's missing off the first page, but this is 2022 is our grants fund. This is kind of the best example, right, of revenues that come to us for a specific purpose, and we have to account for it and expend it in a very specific way. One of the unique things about a Fund 22, so I'm on page 3 now again, looking at the balance sheet, and the reason I want to do it here is because I want to draw attention to the middle part of the sheet where we have our fund balance section. And what you'll see is that Fund 22 has 0 fund balance. It always should have 0 fund balance because this is not our money. This is money that is made available to us by the granting authority, whether it's the federal government, whether it's the state government, whether it's a private foundation. It's made available to us by them to be spent according to the directions of that program. So until we spend it according to those rules, we account for it as a deferred revenue. And so you'll see straight up here, you'll see a large number of deferred revenue, $1.1 million of deferred revenue in Fund 22. What that represents is monies that we have been given and been told how to spend it, but we just haven't spent it yet according to those rules. There are grants that are funded in arrears, and those have kind of an opposite type of accounting to it, where we spend the money and then we apply for reimbursement. When we are applying for that reimbursement, it's a receivable, and so straight up that column there, under the external receivables number, you'll see $1.5 million worth of receivables of money that we have spent and now are awaiting the reimbursement. So, but again, the key is that there's never any fund balance in this, because when you see fund balance, that gives that implication. Just like when you think about your own personal net worth, that's my money. That's what I've got after I've paid all my liabilities and with the cash I have, and what's the cash I've got left, that's my net worth. And in some funds we have that type of scenario, but not in this fund. Not when it's not our money. We are accounting for other people's money.
Brett, I have a question again.
Sure.
Actually, 2 questions. When I'm looking at the MLO transaction fund. That's just
14?
Yes.
Okay.
And I understand that goes back to the prior page when you're saying that, if I understand this correctly, the reason it's still showing dashes is this is a working document that you are still creating and putting together, but it will indeed show the 1999 MLO once this work is complete. And either whatever happens if it passes next week, then that would be in there as well, or if it doesn't pass, it would only show the 1999 one. Do I understand that?
That's correct, because what you're seeing here is a report. This is a reporting template, and so this will be a very consistent style. What will change is the numbers on the page, depending on which year we're looking at, depending on which month we're looking at. So yes, so as the accounting for that MLO would change to pull it out of the general fund and into Fund 14 in the accounting system, then it would start to populate on this page here.
And this has been, just to clarify for anybody who's curious, this is a document this is work that you're currently doing. You've been here 3 months now that you're putting this together so that it's easier to understand for more transparency. And we're still working through it and
Yes.
putting it all together.
Yes. Living document, I think you said that it's a very good term.
What about special education fund?
So, great question. Special education, so let's go back to the table of contents, because you'll
There it is
see
right there.
a page there that calls the Special Education Programs Summary on page 59. So if you click, and again, I'm still in Board Docs, just looking at using the live Adobe file. If you click in the upper left there at the page numbers, you can type in page 59, and it'll take you directly to that page. Now, again, this is a lot of data. I know you've heard me talk about before the difference between data and information, and what you need to turn data into information is context. Sometimes that context is some good analysis and verbiage that does the interpretation. Sometimes it's the orientation of understanding with the data that's presented that able to provide you the context on your own. So do you want me to go through special education, or are you just wondering if it was there on its own page?
Well, I saw it on the beginning of the page.
On the table of contents?
Yes,
Okay.
and so as you were going through, and I saw on the table of contents is grant program summary, which is why I started asking. Because
Okay.
you covered grant program, and then the next one was special education, so I was curious if it was, you're fine, keep going.
Okay. Because I can go down a rabbit hole with special education
No,
pretty
no, no, no.
quick, right? Right, Rick? Yeah. Okay. So let me go back to the front then. So good. I really appreciate like how we've spent some time here at the beginning and these beginning pages to orient ourselves on again on the total business of the district, all the funds. And the key parts of this are, again, this is the balance sheet, income statement, what is our cash positions, what is our budget variances, those type of things. These things you can see and just get a sense of just by looking at the first 5 pages of the package. The next section beyond that, if you go back to the table of contents, you'll see general fund results, graphical presentations. So this is where I'm trying to provide something that's probably a little bit more user-friendly and showing and focusing in on the general fund, which, as I like to say, that's where the action happens. And this is where all of the material portion of our money is accounted for. And so I've just have presented here some different perspectives on looking at and understanding the general fund.
So if I may have a question on this.
Mm-hmm.
We spoke about this nearly ad nauseum, so I'll be cautious with my question. The February gap, how many physical banking days do we have that dynamic?
So, excuse me. So our monthly cash flow focuses on payroll on the 27th, as well as the state equalization payments, which happen on the 25th of each month. So as I understand it, some years ago, the decision was made to set the pay date on the 27th after the state funding payment came in on the 25th, and that was a strategy to manage cash flow at that time. And so when you ask for banking days, really what you would see there happening in February is is an end of February projection. And so the state payment comes in on the 25th. We hit payroll on the 27th. So then from the 28th of February through the 10th of March, when we receive our first large property tax remittance from the county, that is our tight window. So those 10, 11, 12 days.
Okay, and when we receive the funds from the county, are they liquid?
They are.
Okay, so it's actual spendable funds.
It is.
So we really have a week and a half, calendar week and a half gap to where we're skinny.
Right.
And the number of skinny based on what you're showing here is still over $2 million. So on a 1 to 10 scale, what's our risk?
Our risk is an acceptable level of risk.
Yeah, that's what it appears to be. I just want to
Yeah.
make sure we're all clear on that.
I don't know what your 1 to 10 scale is. 1, lots of risk or no risk?
Let's say 10 is no risk.
10 is no risk. Okay, so that we're sitting, that's probably, I'd say, where we'd be getting towards, a 6 or 7.
Okay.
You just have to be careful. But if you're...
And as a backup, isn't there a facility available to us for an immediate swing loan?
There is.
And the interest rate for that loan is?
0.
Okay. So the point is, for the team here and the public, it's not quite a zero risk scenario, but it's awfully close.
Yes.
And that's only general fund. That doesn't mean we couldn't also temporarily borrow from another fund and create our own swing loan in an immediate scenario, right?
True.
Okay. So the books are healthy.
Books are healthy. And if we manage this purposely and intentionally, yes, it's not a no risk situation, but it's certainly not a reckless pattern or a reckless strategy to be pursuing.
No, it's a thoughtful, conservative strategy.
Yes. We want to handle our
Thank
own
you.
business as much as we possibly can.
Yep. And then we have a parachute if we need it.
We do.
So Brett, we see the funds come in from the county based off those property taxes in March and then May?
March, May, and June.
Okay. Yep.
Yes. If you
what I
when
thought.
you get your property tax bill in January, it gives you options. You can pay half of it in February, half of it in May or June, and then, or you can pay the full 100% of it in May. And so it follows that pattern. So again, on the general fund, where the action happens, that's why there's a lot of pages devoted to this, where we can look at the kind of the total results on this first page, page 6. So that top graph is the beginning of your fund balance plus revenue less expenses equal the end of your fund balance over on the right. So to one of our earlier point questions when we were looking at total fund balance across the board and its performance against budget, the general fund is one of those where, because we had fewer expenses than budgeted and we had a little bit more revenue than budgeted, those two things combined to give us an end of year fund balance. I'm sorry, we had a little bit less revenue than budgeted, but not near as much as the savings on the expense side. We ended up having more fund balance than we anticipated at the end of the year, versus the budget.
Is that an anomaly or is that static? Does that often happen?
It's probably a little, the size of that difference being about $2.5 million is a little bit larger than we would normally want to see. But that would be the right directional pattern for it, just something that's a little tighter. But again, I think and that's why the second graph is important. I think it's important that it played out that way, because if you look at that February chart, if you see that February spot on that second chart, if the budget had played out according to, we would have really been skimming the surface in February. And so by having it a little bit better, it was a much closer to a zero risk scenario as we hit through that February trough.
And again, it's only 10 days.
And then even then, it's only 10 days.
Sure.
So it's not a February.
Although I spend a lot of time in the days for hire looking at those 10 days coming at me. All right, the next page just does a little bit of a next layer on general fund revenue by source type. So on this first graph on page 6, we saw $47.5 million of revenue budget versus $46.7 million of revenue actual. Okay, so tell me more about that. So the next page separates out between local revenue sources, which are the property taxes that we levy, the state revenue sources, which are those state equalization payments come from the School Finance Act, and then we have our Monument Academy PPR transfer. Since we are the district, we are the fiscal agent, if you will, for their monies. They come to us first, and then we remit them to MA. So what you see here is in the local revenue. I think we've intimated that a couple times before, that our actuals exceeded our budget by about $600,000. And then on the state level, our actuals were short of our budget by about $600,000. Fortunate that those things were pretty well offset. But again, I would endeavor to make those variances much tighter going forward, because this is really known information for the amended budget process. So we should be able to tighten that up. The two graphs down below indicate that there are a couple of other, what are the revenue categories within local revenue, for instance. So we have the general property taxes that fund the School Finance Act, and then we have SO, or specific ownership taxes, the vehicle license plates revenue that comes along with the property taxes. Here's where you do see the 99 MLO property taxes in place. So to our earlier conversation, once this is segregated out into Fund 14, it will drop off of this chart and then be in its own fund. And I think the main message from these two graphs is just the overwhelming majority presence of those two items being the local property taxes and the state share equalization. Yes, there are some other pieces in there, and those other pieces can cause some variances, but those are the two things that are driving our budget.
So I think I want to insert something that is important here. When we talk about our local versus our state share, and we often hear things like go to the state, I don't think folks in our school district understand and recognize, and I think this is very helpful to illustrate that our funding currently, so let me take a step back. The 1994 School Finance Act says that we're supposed to be balanced 50-50, 50% local share, 50% state share. Right now, D38 is 66% state share and only 34% local, versus Denver, for example, is 70% local share and 30% state. So we are off balance in that we really do rely on that subsidy for the state to subsidize our education right now. And that's not the way education was designed in Colorado.
It's not the way it was designed in the United States. You know, the way the public education system started in the 1800s was the little towns, the farmers would get together and build a schoolhouse and hire the teacher. It was all a very locally oriented process, and those roots are still here today, but they have skewed a lot over the last 100+ years.
I think there's 5 states: Kentucky, New Jersey, Alaska, Hawaii, and there's one other where it's designed to be state funded mostly, but Colorado is not one of those states.
Right.
So, quick question on that. Is the reasoning behind that dynamic our lack of commercial properties in the region?
Yes. Sorry, Brett.
There's actually a few different factors in it. The biggest factor that I would say that is in play, what has caused this swing, was what the Gallagher Amendment did between 1982 and when it was repealed, because that one of the problems. A little bit of editorial here. One of the problems that we've had in Colorado is we've put too much fiscal policy into the state constitution. And that means it couldn't be adjusted appropriately as time went on. At a statutory level, it could only be adjusted by the voters. There are pros and cons to that, but what it did was, as the Gallagher Amendment forced residential assessment rates to go down in order to maintain that 55-45 ratio, it was to the benefit of residents and homeowners, but it was to the detriment of the intended funding source for a program like public education, where it was intended to be a 50-50 split. And that split got eroded over time because Gallagher was causing that reduction in residential property assessment, which caused a reduction in residential property taxes collected relative to the way that inflation was changing the overall picture.
Well, isn't it more, when Gallagher was passed, it could fluctuate up and down, but when Tabor passed, Gallagher could only make it go down, and it's a vote by the state voters to go back up, to fluctuate. And it's still in states, it's still statute, it's not been taken out. In fact, we did ratchet down this past tax cycle. So instead of it being in the Constitution, it's now it's been transferred to statute.
Well,
Excuse me.
Sorry.
I really wanted to go through the mechanics of this report, and we've kind of gotten off track. So if we could get back on the agenda, I would appreciate it. I would like to go through it in detail.
Okay.
Sorry.
If I would just follow up that point and then go back. You're right. The pieces are playing together. The assessment rate is a statutory mechanism that the legislature enacts, but it only enacts it according to what the Constitution allows it to do that. And so it was requiring the 55-45 adjustment, and then you're right, as Tabor came on board, then it was requiring it's only going down or staying the same. It was never going up after Tabor. And so all those pieces together, it kind of came this unholy alliance that really was leading to this only end outcome, which would be that the state would have to end up backfilling more and more and more of the local share as it went down. So to that point, really, if you look at these two big bars in these graphs on page 7, the state revenue categories with equalization and the general property taxes, those are both components of the School Finance Act, and they offset each other. So if the general property tax column were to go up from this 20 or 15 million-ish range that it's showing here, say it doubled all the way to 30, that wouldn't change our School Finance Act funding by $15 million. It would reduce the state share by $15 million, and we'd end up with the same number. That's the way state equalization works. That's the way the School Finance Act works. And I know that's a confusing part because that's what happens with the general property tax revenue, but that's not what happens with mill levy override and with bond revenue. So it's a very confusing scenario where, from a taxpayer perspective, I'm paying one tax bill, but really what they don't understand is that tax bill is really in three pieces. And one of those pieces, probably the biggest piece being the general fund money, has its offset at the state level. All right, so after those revenue questions, then the next few pages get into the expense pattern, again, of the general fund, and looking at that in a way that we start to break it down into individual school locations. And this first subtotal page is the total of all school locations. And so what we have there is a donut chart on the left side, which has...
I'm sorry, so this does not include MA, right?
This does not include Monument Academy, no.
Everything except MA.
Yeah. So total school locations of the operated schools of District 38. And so, again, with this pattern, you'll see for this whole document is we're looking at the two data sets. What happened what was the budget saying? What happened in actuals? We're still looking at 21, 22 actual results. And we start to then break down the data in a couple of different perspectives. One would be what you would call a program view or programmatic view. What are we spending on regular education and special education, support services, administration, et cetera. And then another one is an object view, which says what are we spending on salaries and benefits and purchase services and supplies. Those are two different ways to look at the same data set. So you just turn the Rubik's Cube, if you will, a different direction, and you'll look at the same data from that different perspective. So the way that's easiest to demonstrate that is we look on page 9 at the beginning of our school set of pages, and here's Lewis Palmer Elementary Schools report for 21-22, and looking at the table, the data table that's kind of on the middle of the right side of that page, you'll see the first set of numbers is their budget for 21-22, and the second set of numbers is their actual result for 21-22, and then there's the percentage of budget spent. The total spend for that school was budgeted to be $2.9 million. It ended up being $2.6 million, so they spent 88.6% of their budget. Their funded student count just below that shows you at 403, so a per pupil spend of $73.13.97 was the budget. The actual spend was $64.77. Again, that's the 88.6% spend. And then the third way of recasting that same data is the object category recast, where we say what of that money was spent in personnel, what of that money was spent in implementation costs. Again, it's the same 2.947 and the same 2.6 million in total, but breaking it down to personnel implementation, this is where you validate that we know what we know, that most of our money is always in the people. So their budget was $2.7 million in people, $2.4 million was actually spent, so it was 89% spent on personnel.
Quick question.
Yes.
So to Mr. Taylor's point about the mechanics, in this scenario, there's roughly, what is it, $260,000 delta between the budget and the spend?
Yes.
Roughly.
Yep. Actually, 340, but.
Thank you. Does it return to the general fund?
Yes. So that is still in the general fund balance. So that's part of why our ending fund balance was higher, is because in general expenses were lower than budget, and this is a slice of that picture. And then as we get into amended budget discussions for this fiscal year, we'll have that conversation of, well, what should we do with that carryover money, that unspent money from last year? How should we reapply that? Other questions on this basically page, because what you'll see is this page style just repeated in the following pages just for the different school locations.
I'm curious, have you had any conversations with acting COO of MA, can they provide this similar format? I don't want to put burden on them. I'm not trying to be, too technical or whatever, but this is useful information, and we have 10 locations.
Right, and what I might be able to do is take the data that they provide and cast it this way, and basically report it this way. They provide us a very detailed data set, and as we get into more of a regular routine in terms of the timing of how that comes together, and then the way that I put this together, I should be able to slide in a couple pages here that have the same look and feel for the MA results.
Excellent. Thank you.
But that'll be a while.
I understand, but the detail that you get is comparable.
Yes.
So hence you could do this.
Yes.
No rush.
Okay.
Okay, but thank you that eventually we can see that.
Yeah, I would like to do that. Now, and again, as you mentioned, Tiffany, this is a living document. One of the things I'm doing in my current version of this, my working version of this, is putting a page reference from this page to the detailed page, which is the numbers behind that are summarized on here. And I'm just kind of eyeballing it here. I think it would be that page right there. So page 30 is the detailed numbers that are behind that summary page. And if the summary page is enough for you, you probably don't want to go here because this is just a bunch of numbers. But if you do have questions that come from that, looking at that summary page, and you want to know a little bit more, then here's the next layer to peel back that onion.
So is it fair to say you've got the first 6, which is system-wide, high level.
Mm-hmm.
Then you jump into the expense categories, program focused for the district as a whole and the locations.
Mm-hmm.
Then the next level is this sheet where it actually breaks it down. So it's at almost a GL level, right?
Right.
By account. And that's the way it rolls up. So you've got deeper,
Mm-hmm.
you've got it by location. I have all the detail. Then I have a summary with a graph and a logo that gives me a quick picture of it.
Mm-hmm.
And then I have the high level that's consolidated.
Mm-hmm. Yeah. So that's where at the beginning I mentioned, it's probably the first 23 pages in this case that could be kind of your best read, if you will. Total picture of the all district. Here's some good detail on the general fund. That gives you a good solid place to be if you know nothing else than that. It's when you have additional questions, want additional levels of detail, want to look at something in particular, then those last 50 pages are going to take you to places where you should be able to get some of that.
So depending on the individual reader, they have whatever level of detail they choose to review.
Right. And that's again, my intention with having this is I want to provide a full set of transparency, which means lots of detail, but having some good summary information on the top of that would be most useful for a majority of the audience. And admittedly, that's where I'm still making improvements and always making improvements on because I'm a detail person. So,
well, again, kudos for this. I'm really glad to see it. And as I've gone through each one and drilled deeper, it's self-explanatory to me. But I'm an accountant, so I understand what you're doing, and I think you're doing great. Teresa, do you have any questions on the format of this presentation?
No, I don't. I've been following along, and it's all laid out really well. Thank you, Brett.
Great. You're welcome. Thank you.
Tiffany, do you have any questions on the formatting and how it rolls up?
No, I'll reach out to you if I have any questions.
Okay. That'd be great.
One question I have is on this. You guys talked about Gallagher and all the reasons it's the way it is, but I would like to see, if possible, a trend line that shows over time the proportion of local versus state, just annual, right? Just maybe a stacked bar or something that would show over time how that fluctuates.
I have that's a graph that is presented at a state level quite frequently, and I've got a picture of that somewhere in my hard drive, and I'll be able to
Awesome.
find that and send that to you, because it does really tell a really interesting picture how the lines crisscrossed. It was a majority local support throughout the 80s and before. Gallagher, Tabor, everything kind of created this intersection point around 96, I want to say, and then boom, it went opposite directions and totally flipped. So
It's an important, that's good information.
it is. It is.
Brett, I do have a question.
Yes.
That just came up in my mind when I'm looking at the information for each building.
Okay.
Can you? The acronym like Perch Service, Perch Service. Can you go down? No, go to page 43, which is.
Oh, at the detail pages, 43?
Yeah, the detail pages. Just any detail page. It doesn't matter any particular school. Yeah, those
Okay.
3 lines. The top, those 3. Yes.
Yes.
Can you? I don't know. As a non-accountant, I don't
Yes.
know what that means. So I don't know if that means, is that the lights that it takes to turn on the building, or is that the field that's in in a high school field? I have no idea what that means.
Okay, great question. I appreciate you asking that. That's the kind of question I need so I can know how to provide you some good orientation and context. So I've scrolled up to I've scrolled up to page 25 here. And so 25 is this total school locations detail page, which is again the backup behind that first graph page that we have. And so what you see again going across on these pages, across the rows, across the columns on the top is the programmatic definitions for regular instruction, special education instruction, et cetera. Going down the rows in the first column on the left side is the object view of the spend, meaning is it salaries and benefits as you see at the top, and then there are the implementation cost categories, the first 3 of which are 3 different subsets of purchased services. The subsets of purchased services are number 1, the prof means professional services, purchased professional services. So that would be when you, for instance, when we're hiring an auditor to audit our books, that's a professional service that we are hiring. Legal is a purchased professional service. The second category is purchase service for property services. And so those would be things like when you hire a plumber to come out and fix a problem that we can't fix on our own. That's a property service that we're purchasing. And then there's the ubiquitous other, where most of the money happens. Where
Right.
It doesn't fit into either of those 2 categories.
So I think it's the other that I often think about too. Like
Right.
other, that seems very vague.
Yeah.
Is that curriculum? Is it shampoo for a carpet? It's very vague.
It is vague, and we would only be able to provide additional detail by starting to dig into a particular number on a particular line. So, for instance, if we see here in total school locations, it's $525,000 of purchase service other, well, we would need to dig into that to provide you some clarity in that, because it could be any number of things and any number of purposes.
But that's a good point, is when we want to see that, we can make the request and get that detail on any of these pages, right?
Exactly.
And I think that's the point, right? We can always this isn't all the detail, but it's a sufficient, well, it depends, right? It should be sufficient for our needs, but if it's not, we ask for detail and he can provide it. Because how many pages are we at?
Yeah, we're already at 70 pages, and this is a summary view, at 70
I
pages.
don't want 200 pages.
Well,
This is a lot, in fact, but I understand what you're saying, but that's where we just ask for it.
So we ask for it. I appreciate, actually, this is very valuable for me as a board member. What I'm looking at is I'm looking at it from a non-board member lens or a non-accountant lens. If I'm, somebody's parent wanting to know where's my school spending its money, where would I as a parent go to find that information? And it's on the financial transparency page when it's line by line. But if I'm a parent asking what is other, where do I go? I
Well,
pick up the phone and call Brett Ridgway.
Well, or
You
on
send
our
an email.
website,
Yeah.
Mark, perhaps we have, a submission, right, on that page, a question, and you submit a question, and you get the detail. You are no different as a board member. I don't feel any different than as a parent. So the point being is, if I have a question as a parent, how do I submit the question? Since I'm not sitting in this meeting, it would make sense that it's on our financial transparency page.
Would a parent know that?
If we tell them,
I think if
it
we
has
set-
to be
set that up.
communicated. If we don't tell them, they won't know it. But that's the whole purpose of this roll-up today, right? Is you're raising appropriate points, right? They didn't know before. They don't know now because it doesn't exist, does it? I think it's a good idea.
And I think one of the reasons why that would be what I would prefer and suggest is when the further down into detail you get, the more likely to misinterpret the detail you are. And so, yes, we could provide a report that has all the gross levels of detail, but the chances of that being misinterpreted and misunderstood are really high at that point. So it'd be better to say, yes, ask the question, I can provide you the answer, and I can provide you the context that will give you the good complete piece of information rather than just a piece of data.
Excellent. And frankly, 99% of the people don't want to see the check register, right? There may be a few that have that interest, but if you can provide the information within the context of this framework, I think it adds a lot of value upon request. Do you have more on this presentation? Because we're running short on time.
Not on this presentation necessarily. I could go more, but I think
I
there
have
are a
1,000
couple topics I
more
want to talk
questions.
about as the amended budget for this year, for 22-23.
That would be awesome.
Okay.
Let's be agile, not flexible.
All right. Yes, right. So if I go back to board docs, and there's a couple of different spreadsheets actually that I loaded up there, not PDFs. And so I want to walk through these two things with you. The first one that I'm going to walk through is called the SFA projection. It's the School Finance Act projection. So if you actually click on that and download it and open it in Excel on your machine, that will be the best way to see this and use this. So when you do, you should come up to a page that looks like this. Zoom in a little bit here. Want me to move on? Go through it? Is everyone there that wants to be there? Okay. So School Finance Act, again, the majority of our funding, right, that happens in the general fund. And so this spreadsheet analysis is going to orient you from what was our final place, our final results for the 21-22 fiscal year here in column D. What was the budget that we adopted in June in column H with a variance column in between called a bridge. It's just the variance between the two. So you see the different sources of revenue, the local property tax, the specific ownership tax, and the state share, getting to the total, and it's called adjusted total program. I know that's a little bit of a funky name, but that's where, when you see it presented that way, you know that the budget stabilization factor is already included in this. Okay. And then in columns J and K, we have the budget that would be broken down between the D38 operated schools and what is Monument Academy. Okay, so $47.9 million for operated schools, $10.3 million for Monument Academy. And the reason I want to strongly orient us in this is because now we're going to start talking about what changes in the assumptions between the adopted budget and what we're going to need to be talking about in the amended budget. The two pieces of data that are going to change in particular are the district's funded pupil count, which is row 13 there on right where we're at, and then the per pupil revenue after the BSF on row 15. So over on the left-hand side of this page, right next to the number 53, you'll see a little plus sign. This, if you click on that plus sign, it expands and shows you some rows that were down beneath, that were hidden for that initial view down beneath. And so you'll see some arrows that are directing us, kind of connecting us from the adopted budget line down to where we're projecting now for the amended budget. Go ahead and expand the plus sign over column R as well. And then we can just walk through this. Now, so I'm going to be down in this lower section starting in row 24. So it's the same level of data there starting on row 28, the local property taxes, specific ownership tax, state share, et cetera. And you'll see a couple, then on row 33, the district's funded pupil count. And I want you to go ahead on the spreadsheet version that you have, change the number that you have on that in cell J33 to this number, 6395.1. And the reason I'm doing this is because what we're doing here is what is the projection of October count? And October count is just finalizing like yesterday. And so I really would love for you guys to have the most current set of data. So what I had loaded up in board docs, I am suggesting we tweak that now and look at this 6395.1 total. So if you did that, what you should see in column L is a new calculation of the variance from the adopted budget to what is being projected now for the amended budget of $456,000. That variance, if we go straight down that column here in column L, can be broken out. You can see that the student count variance is 50.3 negative. Okay, so the consolidated budget between the operated schools and MA is going to be 50.3 students down. And so it's the volume variance that we're currently projecting, because we're not really projecting much of a rate variance yet on cell L35. It's only 27 cents difference. And that's just a difference of what the budget was set at versus what we're currently being funded at as of today. So the volume variance is the key piece of variance that's created here. Volume being that student count volume, that 50 students down times the per pupil revenue rate creates $324,000 worth of that $456,000 variance. Again, we have very little on the rate variance side, and then there's a mixed variance, which is the combination of the two that's left over. So that's how the total $456,000 variance is broken down between volume and rate. And this volume and rate concept is something you're going to hear me talk about a lot, because what we do with volume variance, positive or negative, is different than what we do with rate variance, positive or negative, strategically. So that variance can be broken down, again, to the two entities, being the operated schools and Monument Academy in columns N and O. So if you go to N33 and O33, then I want you to change those two numbers that you have on your version of the spreadsheet to these two, which are 5277.9 will be the operated schools funded pupil count. And the MA's funded pupil count would be 1117.2. This is the most current data. It's not quite final, so it's completely possible that this will change, but as we get later in the process, those changes become very much smaller and become more just true-up adjustments rather than some type of material adjustment. So we get to the kind of cutting to the chase then at the end is what we see in column Q and R for operated schools and Monument Academy, the potential variance of the amended budget versus the adopted budget. On row 31, we see that the operated schools would have $159,000 worth of revenue reduction because our student count right below there is showing 17.5 lower than the budget. Monument Academy's student count is 32.8 lower than the budget, so their variance is $297,000 of the general fund. So this is, and you know, that's not a small piece of money, but it's also not a catastrophic change either when you think about it being on a base of $48 million. Okay, we're talking about a 0.3% variance. So that's not bad, but it's not something we can ignore either. It's something when you hear me keep talking about being precise and levels of precision, these are things that we still are going to want to account for specifically.
I just did the exact math.
You did the exact math. Did we race? Who won?
You won.
I won. Thank
As
you.
usual.
Yeah. Monument Academy's variance is a little bit more substantial. It's 3%. So that'll be a tougher adjustment for them, but still not catastrophic at all. Just something that they will need to consider as they consider their amended budget. So has everyone followed me through that? Are there any questions about that? But this is the first step of the amended budget process, is the way that I traditionally run it, is to say, what is our October count? What does that mean to the budget? And then what are going to be the secondary and tertiary effects that we need to do from this?
Appreciate your cost accounting.
All right. So let's go back to board docs then and open up the other spreadsheet. So you're going to need to download this one as well. This one is called the Fund Balance Carryover. So you click on that and it downloads it for you, and then you can open up that download so that you're actually looking at it in Excel. And I'll zoom in on this, maybe a couple more levels. And this happens to start exactly where Mr. Taylor was orienting us on that prior financial report, at saying what is our total district all funds fund balance variance coming into this year. So that means it's slightly different, because I'm not comparing this to our budget of last year. I'm comparing this to our budget of this year. Our budget assumptions for this year were a little bit different than our budget assumptions last year. And so what we actually ended up with is $36.7 million of fund balance. Our 22-23 budget assumed we would start at $32.1 million, so it's $4.5 million higher. Big question, the first question I would want everyone to ask is, say, okay, but where? Where is that money, and how big is that in those places?
One other question, if I may. Mm-hmm. The budget assumptions, do they assume that we're fully staffed?
This is a fund balance budget assumption, not an expense budget assumption. The expense budget assumption does assume that we're fully staffed, but this is a beginning of year fund balance assumption, not an end of year fund balance assumption.
So it's purely carryover.
It's purely carryover, exactly. That's the only aspect we're looking at now, is carryover. What are we doing with money that we brought into the year that we didn't necessarily think we were going to have?
Right. So it's theoretically non-reoccurring.
Non-recurring, one-time money. So again, if you ungroup some of the information here, if you click the plus sign above the R, then you can see we can see what funds that $4 million is generated by, as we work ourselves back to the left then from that total column. You can see that the general fund really was, according to the budget assumption, was really on target. Now remember, I'd spent a lot of time talking about how our 21-22 assumptions ended up being showing a positive variance. We had incorporated that when we were doing the 22-23 budget already. So that is here and showing basically on budget. You start to see some healthy numbers then as positive variances here. It also shows some places where we didn't do budgeting at all, or didn't do good budgeting, like the Insurance Reserve Fund 18 didn't appear to be budgeted at all. So it's showing up as a full variance. Nothing that will be done with that. The big numbers are happening in the Nutrition Services Fund. I'll start there. That is a good thing, because if we'd actually started the year with $335,000 of fund balance, we actually would have been in violation of statute, because Nutrition Services has a specific number that they need to target of 3 months of expenses. So,
Brett, may I interrupt you?
Sure.
I want to try and summarize this
okay,
for us.
am I getting too detailed?
Well, we have time constraints.
Okay.
So the question is this. So the total equity fund balance on line 10, these are now actual numbers.
Yes,
And the budget started with line 13 when the original adopted budget was put together. That's where the starting point was.
correct.
The variance is just the difference.
The variance is the difference, and that represents the one-time money that could be
Well,
available.
it's different in the budget, right? The real money is line 10. The real dollars. The
The real dollars are line
balances.
10.
So our adopted budget was off a bit.
Right. And
so-
that happens.
And that's understood. And so that's why I called it flexible. But now we're going to amend, right, to bring this into alignment. And in that process, there's $4.5 million roughly of funding that was not previously allocated.
Correct.
Okay. I think that's enough for this. Is that okay with you, Tiffany?
Sure.
So we can move on?
Well, I would really ask for a few more minutes if I could, because one of the, as I at the board meeting, and we wanted to have follow-up conversation, was an idea and a proposal about what to do with specific pieces of carryover fund balance.
Understood.
And so I will pick up my pace here and say, let's focus in on Capital Projects Fund 43 and Fee-for-Service Transportation Fund 25. The two variances that show up in these two funds are fairly significant in terms of their level of overstatement, and provides the opportunity that I was alluding to in our last meeting.
Understand. But let me tell you what I perceive that you're doing. We're now saying that we found these funds, but in reality, the original budget adoption was just wrong. We had the wrong numbers in those beginning balances. So this isn't, I mean, yes, I understand the mechanics of this, but it's not like we found money here. It's just that our beginning balances were off. Now, in the budget, the 22-23 budget, there's $4.5 million of available funds that are not allocated, correct? Only because the beginning balances were off.
Yes, and what I'm also saying is not all of that $4.5 million is something that we can do with
the general
There are only certain pieces that we can do
Because
with.
those that are in 4 whatever, they're more specific. They can't be just
Right.
used for general operations, right?
Right.
Okay, we're with you.
Okay. So the only ones I wanted to draw attention to were these two funds, which have 1.3 million of variance and 600,000. So just about 2 million, just about half of that $4.5 million variance is there. And because each of those funds have revenue contribution that's sourced from the general fund, allocations from the general fund, that means we have the opportunity to change that and bring some of that money back to the general fund and be able to spend it for general fund purposes.
And you're suggesting the $1.5 million, right?
And so if we expand the rows there on the left side, between, so that you can expand and see all the rows, what if we're trying to pick up the pace and cut to the chase here, what I'm proposing is this $1.5 million number in the general fund, which is a piece of one-time money not budgeted in the adopted budget. We could adopt a budget in the amended budget to spend for one-time purposes for 3 particular ideas to start with. And you talked about, tying this to the strategic plan. So we have kind of the operational priority, but we have good educational priority as well in here in terms of, devoting over half of that money for priority 1, priority 2 type of spend, but then suggesting a portion of this, about a quarter of this, for an operational spend regarding buses.
So the revenue volume, what is that? What is it? How will that be
So
allocated?
this number is what I was just talking about with the School Finance Act. So that is a little bit of a dated number because it was yesterday's number. The number that we just talked about was the 159,801. So the volume variance from the School Finance Act projection, that's what that is.
And that's just to cover operating expenses.
That's just to say, hey, we don't have to change any other, the other expense line if we can just cover that with this one-time money.
Okay, then audio system / other.
So I'll just briefly weigh in on that. We are exploring what the potential of sound amplification across, at a minimum, all elementary classrooms, potentially including secondary level classrooms. So we're in the very preliminary stages of exploring what the value of that would be, as well as the operational element that allows us to replace our PA system with the installation of those speakers. So it would have direct instructional value in terms of amplifying teacher and student voice, and it would also help us replace some outdated PA systems that we have in different buildings. So we're just in the preliminary stages of that analysis at this time. Chris, on the other hand, the buses does have a detailed presentation. I don't know how much time we have for that today, but I think it's definitely worth it, just elevating the fact that we've done quite an extensive analysis of the fleet, and the bottom line of that would be represented as a recommendation for the purchase of at least 3, if not 4 buses, potentially as early as within this fiscal year budget.
So is there an urgent, time-sensitive matter here? The lead time?
Yep.
Darth Vader. The nature of bus purchases they are a long lead item that was mentioned, appreciated from Brett in the last board meeting. So we would assume that even a purchase right now, we would barely make it for the August beginning of school. But it's good. It's very, very competitive associated with vehicles, whether they be used or new, but buses are in that same category.
So could I safely assume on behalf of the board that we'll be presented with proposals for these 2 line items, the buses and the audio system,
We
in
could-
our November?
We could do the buses as early as the November meeting. The audio may be a little bit of a stretch for November. I could see where we're at, definitely before December, but yeah.
So our final amended budget could be in December.
No, I would say no to that. But pieces of the amended budget will be firmed up by then. When we look at when I'm going to be looking at things like the staffing levels and things like that, that's going to take longer to review and analyze and project that, and that wouldn't come out until January. But something like this could be firmed up by then.
I think we hit January last 2 years, in fact. I think we've used January. I'd like to get it done in December, but if it's not possible, I understand.
It's not.
Okay. Tiffany?
So this is something, as far as the buses, that we tabled before COVID. And I do have concerns about how long are we going to kick that can. I also have concerns about the pay for our bus drivers, because we need more bus drivers to drive the buses. And we have some buses that need to be replaced. So for me, transportation is a priority. If I'm just advocating, then I think that sooner than better, or
So you're
sooner
not-
than later.
Are you asking for a special meeting before the regular board?
Well, I'm asking, can we have this proposal? I know it's short, but can we have this by December?
You have the bus proposal now. You can't take action on it today,
Right.
but you can. We're ready. We could
Okay.
roll with it right now, but we're at 10 after 10.
Sure. What
So-
my point is, maybe I misunderstood you, and I apologize. I thought you were saying we wouldn't be ready to talk about this at the next regular board meeting, but if we are, then never mind.
Yeah, no,
I
I'm
broke
sorry.
it down into different parts.
Yeah, that's not what I
So the
intended, sorry.
buses were ready.
Yeah.
The audio system not
Okay.
in December or in November.
We can have it by December. I can commit to that.
So I do have a request. All this is valid and important, but could we also get from the district leadership the top 4 or 5 investments on a one-time capital basis, mapped to our strategic plan, so that we can make sure we view the entire world instead of a snapshot of one section?
Yes. Short answer. I think you're seeing, or now,
Terrific.
just teasing it. So yeah.
Yeah, we just want happening around us.
Yep.
So that when we have a finite amount of money and wonderful opportunity, best return for the students, staff, and citizens.
Absolutely.
Excellent. Brett, anything more?
No, I think I've taken enough of your time.
Excellent work, by the way.
So, sorry, Mr. Taylor, can I just clarify? What we'll do is, do you want to see the full transportation view of things? We had intended on it today. Obviously, we're past that point right now. So would you like us to make sure that that is built into our financial planning and analysis item for next month, just the bus focus?
Well, let me ask Teresa. Teresa, can you extend for a little bit?
Yeah, I have a hard stop at 10:40.
Okay. And Ron, I think you have a hard stop in a couple minutes.
I can squeeze out to about 10:25.
So let's go to that.
I think we'll have Mark reposition the presentation. Chris, you'll be looped in here in just a moment.
Okay, great.
And then if you have the slide clicker, that should be able to take you through.
All right, well, we're going to go fast. I like fast. Okay. I've edited this thing. So yes, acquisition is misspelled. I have changed that. Going to the next slide. Okay, so real fast. So what is our goal? I mean, we want to be focused on goals. We want to have sort of a clear, definitive line that we are trying to accomplish and trying to be better than. We want to operate with greater than 50% of our route bus fleet less than 15 years old. And we have additional data that we will include here today that talk about the age of our current fleet, but talks about our entire fleet. Everything from special needs buses to spare buses to those route buses. So yes, getting started, we would propose 4 new school buses and that's supposed to be 22-23 school year, and we can procure those dollars associated with that very swiftly. But we want to certainly make sure that we are talking about everything from the industry standards associated with busing, safety. All of our buses that we do buy now, they do provide 3-point safety harnesses for the occupants. Operating efficiency, they are much more efficient in terms of fuel and mileage. Right now we spend $4.40 a gallon for diesel fuel, and we are in a very optimal situation because that's a lot less than most people, but at the same time we can anticipate that number is probably going to go up over time. Bus performance and emission standards, we do comply with all the necessary current codes. Okay, so here's our current situation associated with our route buses. We have 22 route buses. Greater than 50% of those route buses are more than 11 years old. They consumed just last year over 261,000 miles. The industry standard associated with how many miles that do we put on a bus a year in America is 12,000 miles. That's how many miles we put on buses here in Lewis Palmer School District. National average is 8,000 miles. One of the things that I have stumbled across in the research and working with my transportation staff, our special needs buses are actually closer to 14,000 miles a year. So we are very hard on our buses associated with the distances and the number of routes that we drive. So we are one of those school districts that probably are on the edge associated with what we push buses to be able to do, and certainly the maintenance considerations that we have to support, the weather conditions and things of that nature. The average age of our 22 route buses, they're all 10 years, the average age is 10 years old. Typically you don't want to run buses more than 15 years. 15 years is kind of the critical point. So these are our oldest route buses, the current route buses that we utilize today. Yes, we have one that's from 2001. We have 2 from 2005, and you can see the other information there. So that's 12 total buses from 2001 to 2008. So they're a little bit crunchy. They're a little bit older, and they're a little bit of a situation where certainly the expenses associated with gas and what their mileage and what their efficiency might be, but just in the general nature of parts for those buses, they're not readily available in many situations. And so we sort of have sort of a definitive endpoint associated with our ability to maintain those buses in a way that can support 12,000 miles a year. Okay, so here's a slide, a real quick look at sort of all of our operating buses, all 37 of our operating buses. These are not our special needs buses. They are not included in here, but you can see on the right-hand side there where we are very, very heavy associated with the older buses. Yes, we have buses, 20, 21 years old, but certainly many, many from the 15 years and older, and the 15-year point is the point where people start to assume that you're in a situation where you hope that bus is operational on a day-to-day basis. We are able to depreciate buses in a straight line depreciation method in Colorado for 15 years, and so you can see the situation that we're in right now. Okay, so fleet dynamics. There are currently 37 operational buses, and you can see those 22 regular route buses. We have 6 trip buses and 9 spare buses. You might assume, well, oh, a spare bus, how many miles a year do you guys put on spare buses? I mean, what is it, a couple hundred miles? No, the average mileage associated with a spare bus is closer to 4,000 miles. So even in our situations where we're calling them a spare bus, in those types of situations, we are we are heavy users of our bus fleet. The Transportation Department also includes 6 special needs bus routes, and we also maintain 2 spare buses for those special needs routes. 18 of the 37 buses, certainly 50% of those operational buses, already have over 200,000 miles. And you can see that again, that in America we look at buses sort of well past the tipping point when they get to 15 years and 250,000 miles. So this is sort of just a look, and if you maybe have some questions about the efficiency, the operational efficiency of these things, certainly geothermal is certainly, you want to look at these types of things, both on a fuel efficiency basis, but also on parts and equipment and time spent on these types of things. But you can certainly see in a 2021 bus, it's an appreciable increase in terms of the efficiency and the performance capabilities of those newer buses. So here's our conclusion. Initiate funding model in 22-23 to bring the Lewis Palmer School District fleet to a younger age, overall age. Step 1 is to purchase 4 new buses, eliminating the oldest route buses that we talked about at the very beginning of the presentation. Over the following 10 years, look at a plan to bring greater than or equal to 50% of the route fleet to less than 15 years of age. The proposed plan would assist in bringing Lewis Palmer School District in line with neighboring school districts. I would imagine all of you probably saw some school buses when you came in this morning and those things of those nature. You don't hear much about the Transportation Department, and that's a blessing. That's an immense blessing associated with what's going on that you never hear. I don't know. I don't hear any complaints. I don't know about if you hear complaints, but you never see. We are in a very, very fortunate situation that it just gets done. We find a way on a day in and day out basis to be more efficient, to be as efficient as possible, to make sure that those buses look a certain way and that they accommodate our children and our school children in a way that's safe. But each new bus purchase will result in $13,000 a year in annual cost savings, operational cost savings. So all of our buses have a 10-year simple payback, which is actually very, very good. A 10-year simple payback associated with a vehicle, associated with the cost that we see on a day-to-day basis for fuel and operational expense, is actually a very, very good metric to have. So that concludes my presentation in 4 minutes. You think you like
Go ahead, Ron.
So 2 very quick questions. Thank
sir.
you, and great comprehensive job, by the
Good.
way.
Oh, thank you. Thank the team.
Here's my 2 questions. Given the age of the fleet and the likely need, it appears you have a laddering strategy versus an all or nothing strategy. Is that right? Over the years?
Yes.
Okay. Understood.
Because we are in a.
Yep. Right. Understood. Next one is, have you considered a TCO model so we can understand this migration of the laddering strategy?
Absolutely, no, and the analysis that I did to come up with that simple payback is a cost per mile, looking everything in terms of operational efficiency, fuel efficiency, depreciation, as well as our training and safety costs. That's the model that I used to come up with that number.
Okay. Thank you.
You're welcome.
Tiffany, any questions?
I think this was a very well put together, comprehensive presentation. But there's one thing that's missing. Pay. And I know that that's not part of this as it goes to buses, but I think it's something I'd like to see us having more conversation around. I know that next week will determine a lot, but what pass, fail, or indifferent, we still have to address that as well. We still need bus drivers to drive these buses. So that, but as far as this goes, yeah, this is good.
Teresa, any questions or comments?
Yeah, Chris, thanks for the presentation. I just wanted to ask if you had considered electric buses, and if so, in future presentations, if you can enfold that in your presentation as well, just so that we have a cost analysis in comparison to fuel efficiency, et cetera.
No, absolutely, Teresa. It's a great question. The electric buses, I mean, I get it, but it's one of those things where as you dig into it, you certainly have to have the infrastructure to support it, the electric infrastructure to support it from a Mountain View Electric, not only certainly from what the district can accommodate. But one of the things that I learned when I was in a previous job is certainly when you're dealing with batteries and those types of things, you will see, one of the organizations that you have to engage is the local police department. The types of fires and emergencies that would come up associated with an electric vehicle are a very, very different situation than a combustion engine type of fire prevention type of scenario. I would like to do a little bit more research with the local fire department associated with making sure that our students are in as safe a condition whatsoever in the event of some type of emergency associated with an electric bus. I don't think there's been a whole lot of research associated with that, and I think the proficiency associated with certainly the efficiency of electric buses are certainly there, but we don't have sort of a background in Lewis Palmer School District for maintaining, and we do not have currently the infrastructure that would support making sure that we can keep those buses charged and in a way and operating in a manner that we do with our current inventory.
Sure, I'm just thinking of it in terms of long-term sustainability as we're working with Schneider Electric as well across the overall district and folding all of that into a whole conversation.
Right. No, I think that conversation is very valid.
Anything else, Teresa?
Not right now, thank you.
Thank you. In the budget we were reviewing, there was a number 3 besides those buses. Is that 3 buses in that budget or 4?
Good observation. It's 3 from the general fund and potentially 1 from ESSER monies. So 4 total, 2 different funding sources.
Thank you. So it's consistent.
Yes.
Got it. Very good. One other thought, I'm way out in left field on this, is since we're central here in Monument, is it possible, practical, reasonable, viable that we might work with the town to create a couple bus routes, commercial like, and I'm only throwing out there not for a response because it's out in left field, I get it, but has it ever been thought about, discussed? Is it even a possibility? And I don't need that answer, I'm just curious.
I would have to confer with my team in terms of the history associated with our engagement with the community and what the viability to be able to support and what the revenue or what would be the costs associated with something like that, and would that be something that would be something that we could maintain a degree of solvency that I think we would want to.
Just food for thought. Anything else?
No, sir.
Thank you, and thank you to the team as well for helping with this.
Appreciate the additional time. Thank you.
Yeah, and I'm sorry to see that we have so many that are at 15 or beyond. That's really unfortunate.
Tells you a lot.
So I think that concludes our C what?
C2.
C2. I have a question for the remaining board members, Tiffany and Teresa. I'm wondering if we don't ask Dr. Summers to put policy review and governance as number 1 on our December work session? Is it possible, or is it too late to do that?
I think we certainly can. There's potentially 2 other items that we have for that meeting, one being an update on portrait of graduate and an educator and where we're at in that process. And then I know we are also looking at doing some advanced legislative preparation in terms of our advocacy efforts and coordination with lobbying resources as well. So those would be my 3 items. The one thing I would say is that there will be a need to do a first reading on a couple of these policies. Concurrent enrollment, we don't need to. Choice enrollment, I think we do need to. So what I would propose is a small update with additional detail that will be ready to have in your packet, a good few days ahead of the board meeting, with a little bit more time at the November 14th board meeting, if that.
Those that are required. Yes.
Correct.
And then let me ask Tiffany and Teresa, what instead of a 2-hour December meeting, maybe we go to 3 or 4 hours, because this topic has been glossed over for 2 months in a row, and I'd like to really take a deeper dive into it. So it kind of depends on availability for an extended work session, first part of December.
We're open to that. Yeah.
I think the fact that we usually keep it at 2 hours is pretty impressive anyway. If you tune into any other board members' work sessions, they often do go that long. So I'm in it.
Okay.
Teresa? I'm sorry.
Teresa?
I'm fine adding time to a work session when we know ahead. That's really helpful. And maybe you can advise whether it would be 3 hours or 4 hours.
So just to call this out, it's actually November 29th. It's our first Tuesday back from after the Thanksgiving break, which it just happens to be the Tuesday that's 2 weeks ahead of our regularly scheduled board meeting, which is December 12th for the month of December.
Teresa, does that work for you, November 29th?
Yeah, I can extend. And just to clarify, it helps me to know how far to extend out hour-wise.
I'm going to ask that we have a 4-hour work session on that day.
Sure, I've got that blocked off then.
If we get done early, hallelujah. But I just don't want to gloss over these items.
That would give us ample time to do a adequate deep dive into the policy and governance focus that we have had a hard time going deep into, as well as a couple of other items that I think will be well worth our time on that particular day.
Excellent. Can we then jump to C4, which is preview our November 14th regular board meeting agenda?
And I can hustle through this pretty quickly. We're still working on some recognition events for that particular meeting, so we'll have more clarity on that in the next few days, and we'll make sure to update the agenda accordingly. I will jump down into the big section, Section C. So we have reserved time for essentially what we're calling election follow-up. And that could be a lot, that may not be a lot, depending. I don't really want to put a whole lot of weight into one or the other right now. I guess it's just more of a where will we be? And certainly I know our community will be eagerly awaiting a result and then an opportunity to have some dialogue. You'll have the consideration and approval of the Family Act opt-out resolution. Just as a quick note, there was a draft resolution in exec content in your agenda that just is a preview of what that action may look like, but certainly we'll have some of that follow-up that Misty. Specifically for option 2, yep. So we'll want to make sure that we have the adequate information that was requested from this meeting and include that into that deliberation. Our financial planning and analysis section, which I think has been set up well from everything that Brett's covered today, with some additional detail. I would project, and we can have this as a specific action item under that item, or potentially even consent. I guess it's really your preference. It would behoove us, if we're feeling confident in our direction with the recommendation for the purchase of new buses, to have that purchase approved at that meeting. Again, policy review, or first reading of the policies that we just alluded to. We do have time for a CASB fall conference update. Do we not need that?
Why don't we put that in the work session with the advocacy?
Tie it to the legislation
Yes.
component. We can certainly, okay, we'll modify that. Thank you for that feedback. So we'll strike C5. And then that was what we had projected at this point in time. So is there any other suggestions or?
Well, I have a question about
Sure.
Section E.
Sure.
Board self-reflection and future meeting agenda. We kind of skipped over that last time because of distractions or tiredness or something. I want to make sure that the board is on board with self-reflection and reviewing future agenda items at the end of our regular board meetings. Tiffany?
So I think it's helpful. I think the reason that we haven't done it yet, it's just something new. Takes a little bit habit form, to get in the habit. My only question is, can we maybe deviate? What's the difference between board self-reflection and board comments at the beginning? Because I have a tendency to give my reflection during my board comments.
Well, and that's a great question, actually, because I was going to ask the same thing. What does board self-reflection really mean? And I saw a one-page printout that was more of a scorecard.
Right.
And that's what I'd really like to do if we're going to do that. It's not individual, it's more about a scorecard, if you will. And it's under the, the concept of continuous improvement. So I agree with your thought is, what does self-reflection mean? And if we use that scorecard that is available to us, I'm inclined to think it'll give it better structure and it'll work more efficiently at the end of a longer meeting. Is that?
Sure, yeah. We didn't include it in this particular agenda, but there is a few-page resource that's produced by CASB, specifically page 3, with 8 questions the board can ask of itself to guide the work. And there's nothing that says you'd have to look at all 8. Maybe you zero in on 1 or 2, or maybe you have a specific goal that you're coming into the meeting with. There's a lot of different ways to slice that. So
I'll take the action item to share this with everybody and ask for feedback from all the board members on how they would like to use the time. I think conceptually I'm in agreement that we should do this. I want it to be productive.
sure,
Right?
makes sense.
Teresa, any comments or questions on that?
No, I'll wait to answer. If you're soliciting feedback, I'll answer that way.
Perfect, thank you. And then the future, go ahead.
I would add that I really appreciate as a board member having the future meeting agenda item on our agendas. That's really helpful for me.
I agree, and me personally, have tended to just add those throughout the meeting. In the future, I will just note it, and we'll do it during this part, because I think it's more appropriate to kind of consolidate that into one focus.
It's helpful for us as well. So as we're gaining that clarity and making sure that it's all accounted for, I know it translates very nicely when we can do a quick review and then make those adjustments shortly thereafter.
Yeah, perfect. Teresa, do you have any reflections today?
Not other than I do need to hang up. But I appreciate everybody's time.
Thank you very much. Tiffany.
Thank
any
you.
Reflections?
As the only reflection I have is reflecting on myself on did I seek first to understand and am I understood? And I do appreciate and applaud Teresa and Ron sharing their the agenda item at the beginning, that they shared their thoughts and ideas, and I really understood and I appreciate that they shared that. So I thought it was a good dialogue, and I hope that my perspective is also understood. And I would like to see us, regardless of that, continue to make sure that we're being proactive and strong in taking care of our kids.
I thought just to share with you, I thought Teresa's suggestion was really good, that we look at it holistically and look at our policies, and that's a really good approach. So nobody wants to drop the issue. I think it's just how we approach it.
Right. Her and I had that conversation.
Very good. Very good. Well, I would like to say thank you to the bus department, but they left.
I can pass that along to them.
So,
Happy
Brad,
to.
this is about 3 months, roughly, 4 months, maybe. I don't know. Welcome again. You are doing a great job, and what I'm seeing is your thoroughness, your need for accuracy, which is inherent in who you are, is much appreciated. And so I learned a lot today about you as you did your presentation, and my respect for you is just growing, and I want you to hear that, and I wanted to say that publicly.
Thank you. Appreciate that.
Yep. So with that, I think we can adjourn this meeting till November 14th at 6 p.m. Thank you all.